What we're calling it is maintaining the level of the federal funds rate at its current level for this meeting. Thank you. Thank you. And we did that. If you think about it, we've raised the federal funds rate by 500 basis points since a little more than a year ago, and we think so. We've come a long way. We also think that there's more tightening power coming through. Really, policy hasn't been restrictive for very long. We started at negative real interest rates, and we've now moved up to where we actually are in restrictive territory, but we haven't been there very long. So we believe there's more restriction coming. And what's really driving it, to Andrew's point and Christine's as well, is very strong labor market. We've got a labor market that, where jobs are being created, there's strong wage gains, and that's driving spending, driving real incomes and driving spending, which is driving more demand and continuing to drive labor market. So the labor market is really pulling the economy. And my colleagues and I, as you will know, wrote down in our SEP 2 more additional rate hikes. The median was quite a strong majority, actually wanted 2 or more rate hikes. And the reason for that was, if you look at the data over the last quarter, what you see is stronger than expected growth, a tighter than expected labor market, and higher than expected inflation. So that tells us that although policy is restrictive, it may not be restrictive enough, and it has not been restrictive for long enough.
So I don't get why you didn't raise rates at the last meeting, especially I think it was a surprise that it was a unanimous decision to hold rates steady when you said a majority think that they still need to go farther on raising rates.
It's really just as you get closer and closer to the goal. What we're aiming for is a stance of policy that's sufficiently restrictive to bring inflation down to 2% over time. As you get closer to that, you get closer to the place where the risks become more in balance. So, we did 4 75 basis point hikes in a row starting in June of last year. In December, we moved down to 50. Then we did 3 consecutive 25 basis point hikes. So this is really just a continuation. We're going to move the decisions a little bit, make them with a little bit more time in between them, in an effort to get more information from the data to see how much restraint is really coming from these, through the pipeline from rate hikes that we only made now, in many cases, 6, 8, 9 months ago. So that's why we did it.
So maybe in every other meeting hike?
We've not decided that. So the only thing we decided was not to raise rates at the June meeting. We have not made a decision to go to that. It may work out that way. It may not work out that way, but I wouldn't take, moving at consecutive meetings off the table at all.